enjoying the sunshine, training, getting some work done, and trading as well. Yeah.
Yeah, yeah, for sure, right? I bet.
Although
Um,
it's going to be kind of cooked with the time zone difference, right? Like New York Open's going to be 8 o'clock over,
8 o'clock, yeah,
right?
yeah, something like
The
that, bro.
8:32 in New York is crazy.
They're good for. I mean,
Yeah.
Thailand's really good for Web3 though. There was a the last time I went, the day I left, there was a really big Web3 convention I would have gone to if I'd known.
Oh
Yeah,
yeah.
they're really open with it.
Dope,
Um,
dope, dope. Well, I'll definitely be trading Asia session, eh?
yeah, yeah, exactly. Trade
That's
a
it.
low volatile session.
Yeah.
Um, let's see, what should we get started with? We'll go here. Let's have a run through all the majors and then we'll take a look at everything. Right, Dixie dying. I think we looked at this last week. Nothing's changed. You arrange mid still. You're holding it. Um, I want to see a one more pump up on this back towards here, even to 382. I wouldn't care. Just keep on distributing until at least BTC or ETH catches a fat rotation, because I'd want the big next drawdown to be correlated with, like, crypto actually catching rotations, right? Because if you go all the way back down to range lows and then crypto still hasn't caused a rotation, I don't know what to make of this. It's a bit cooked. But yeah, let's see what happens with the Dixie. Nothing's changed since the last time we look at this. We're still going a bit sideways. But you're at the range mid again, right? So the same range mid we've had since 2023, 2024, right? The same exact range mid. You're back at there again. So if you lose this, then ultimately I'm expecting that range low to get raided, right? But if not, then maybe bounce off the line for a bit, chop around some more. But ultimately, like below this, with the ranging, with the ranging market is really simple. If you lose the highs, just look for the mid. If you lose the mid, ultimately look for the lows, right? That's it. So let's look at the USDT dominance chart next, right? This is the interesting one. So we're propped up against 5.53%, right? So this is that absolute range extreme I would not want us to go and reclaim and to support, right? So again, we talked about how obviously we didn't break the actual range extreme in terms of the diagonals, right? We maintained the old demand zone, and then we flipped the 6-month seller zone low, which was 4.35%, back into support, right? So that fair value gap that I was watching for, that got ran through. It didn't even get filled. It got absolutely ran through. You wick to the top, 5.53%, and now you're trying to flip that fair value gap into support. Locally speaking, USDT dominance at resistance, right? So if you look at this again on the weekly, here's your trend line, right? Here's your one tap, two tap, and until you break out retest, this is going to be resistance. So that's one thing going for you if you're looking for any scalp longs, right? Back towards, maybe this goes back towards 4.94% perhaps, or something like this if you're looking for some scalp longs. But ultimately, like, if this does break out, like I was saying before, like 7% looks very, very likely before maybe we have our next major turn down on USDT dominance. So the levels you're messing around with still is still that 6-month seller zone low. So you go to the 6 months, right? This area that was very big resistance in the past in 2021, 2022, got the breakout, you got the retest, and currently you're just reacting around the retest, but on the higher time frame, right? This is the important thing. If by some miracle we still happen to be closing below 4.94% by the time the 6-month closes, right? So the current 6 months obviously going to close end of June. We are going to have some massive distributive structure play out on this, and I would expect the lows to get taken at that point, right? So if we do break out, then I expect some sort of chop. Basically, my target would be by the time this 6-month closes, let's get below at least 4.94%. That's what I'd look for, right? And then the second half of the year is when you then get like a delayed reaction, like a delayed cycle. Basically, continuation is what I'd see for now, but that's completely dependent on what does this do here, right? So we'll keep a close eye on this one. Important to do so. Um, but currently you are below a resistance level, right? 5.53%, where sellers have shown their hand in, yeah, we've gone this high before, but if you rejected here, then we've also gone this low before, right? So, all hope is not lost if you are bullish, but of course, it's like, if you are looking to de-risk here, right? Let's say you capitulated, then I would say you've done so at the worst possible time, right? It's like plenty of signs were there before we had this pump up here, right? This pump is something we were talking about as after we reclaimed that low, that blue box. So this right here is now a good opportunity, in fact, for you to take some, again, scalp longs, right? That's it. As long as you're below this, scalp longs, scalp the swing mindset. Don't just blindly go into swings, 100% in and think you're going to get this, the relief, continuation to the market like next week. You're gonna have time for it, but scalp longs are definitely going to be in your favor until at least this happens. It's a very simple flip, but that flip is going to tell you now, longs are going to be that much more cooked if we do run up towards that high. Right, so scalp longs until this flips now is what I look for. So that's USDT dominance, and judging from how I think Europe is going ahead with delisting USDT on, I think, Coinbase. I don't know if there's going to be any other exchanges, but Europe's taken a stance against USDT. The USDT plus USDC dominance chart, in my opinion, is going to be that much more important going forward. So again, this thing is at resistance, currently still trying, if it stays like this, it's going to be distributive structure at the end of the day, right? So only if you get above this, then you have to worry about, higher targets. But otherwise, if you do manage to just sort of stay here, right, not go too high, keep rejecting off that 8.8%, for example, I would not want to get above that for very obvious reasons. As long as we can maintain below this, ultimately I'd look for a rollover and back down again, right? But if you ever go and now reclaim this level, right? Reclaim the 764786 diagonal plus that 0.5 into support, then you're looking for expansions up towards even like 11% on this, right? That would be very, very nasty, which is why I'm only mentioning this. That's a if this then that scenario. Don't think about this target right now, right? A price action isn't telling us it's going to go there right now. I'm just telling you guys, if this keeps up and we start doing that, then that would literally be your next target right there, right? Between 10 to 11%. But where we currently are, right, distribution is currently playing out. Nothing here is indicating that we're going to flip this yet. So until further price action comes in, again, this is at resistance, right? So this is another reason why I'm saying scalp longs, because even if we might just go down, put on a higher low in, that drop there is going to correlate with a relief rally across the market. Right? So based on both USDT and USDT plus USDC dominance, at the area where you are, scalp longs is going to be more favorable in terms of RR than any sort of shorts at this particular area, right? So Bitcoin dominance. Let's take a look at that next. Still holding the key area we were talking about, right? A bit low volatility right now in the sense of you've just been ranging within this area for a few weeks now. What used to be resistance on the monthly, right here, currently being treated as support. And you had a weekly close last week above the 2019 12-month macro read buy zone mid, right? 61.11%. So above this level, I'd be looking for 62.62 next, right? I'm talking locally. Then this cluster between 64.1 to 64.3. And you guys already know my stance on this. Ultimately, I want that 1.618 to get hit, and then we will rebalance ourselves, readjust ourselves, look for new scenarios once that gets tapped, right? That's, of course, it's an if. We might not get that high. This might just be a wave structure that doesn't play out. But, there's a fair value gap, there's a drawn liquidity, there's a drawn wave structure. It's just a nice target that I see, right? Go rate that high and then maybe put distribution in there. That'd be really nice if we got it. But yeah, above this level, this is telling you Bitcoin is going to outperform a lot of coins, especially above 61.11%. It's just what it is, right? Above 60.9 to 61.11, Bitcoin is going to be outperforming a lot of altcoins. It's just what it is. Bitcoin dominance is still very, very strong. So that's BTCD. Let's take a look. What else do we have? ETH dominance. That's the next one I want to watch for. ETH dominance still bouncing off 9.13%. It does not want to give me the 886. I was looking at this last night thinking, oh yeah, this might be it. No, it just held like an absolute rock, right? So 9.13% is still holding. Again, 0.886 I really want to get. We might not get it because at the end of the day, right, no one's going to complain if you get an 866 or 886, right? And this is just the autistic side of me wanting that perfect tap. But no matter how you look at it, it's a wave structure. You've got a bullish wave structure coming in. If ETH dominance bases out here, this is a higher time frame smiley face, i.e. higher time frame accumulative structure going on around these lows, right? So then again, you just take the targets for the harmonics. I've drawn them out over here. Right? I've already explained my thoughts on this. What I said was it's very possible that we only hit like the highs of T1 or like the mid, so on and so forth, 0.5, and then actually chop around some more until 2027, 2028. Until we get the actual breakout, right? That could very well be possible. There's no guarantees this is going to break out this cycle just because of what this is representing. This is representing dominance of Ethereum. right? And we know this is a diluted cycle already. So we might have a scenario where Ethereum doesn't get as much rotations because of how many coins there are. And maybe next time we go on elongated drawdown, a lot of these alts actually dry out. Something else comes up, like, just in terms of macro legislation or something that maybe cuts off a lot of alts, right? Maybe it becomes harder to open alts, whatever. Maybe something will happen that actually focuses attention back onto coins like Ethereum, Litecoin, AVAX, Monero, so on and so forth, right? Your actual dinos. That's a scenario I'm, considering. But for now, the thing I want you to know, forget about all that for now, right? Just something to think about, really. But in terms of the chart where we are, very, very important support. Yes, we could break down some more, but ultimately these are the areas where you're looking for dominance on Ethereum to bottom out, right? Again, if this bottoms out and it starts going up higher, what does that mean? It means that the market cap of Ethereum is increasing. We're seeing money rotation into Ethereum, right? Um, if you lose, even if nothing happens, even after all of this, I don't see the hope for ETH. In terms of USDT pairings, BTC pairings, so on and so forth, everything's at the key areas it needs to be in, right? If these don't hold, they're gonna go rate the lows. That's literally acting like a shitcoin that got rugged, right? Which is actually crazy, considering Ethereum is the second biggest market cap in crypto, right? But that's ETH dominance. So my thoughts haven't changed. The scenario hasn't changed. Hopefully we get the 886. If not, we just watch for a bottoming structure to form at this area. That's it. So that is ETH dominance. So let's look at total first, right? We're still maintaining above 2021 12-month seller zone mid, i.e. if you go to the yearly, the area where in 2021 sellers based dominance, i.e. through 2021 and 2022 we got confirmation that sellers were in complete control over the buyers on the higher time frame at this area, right? So I marked out the support resistances in terms of the seller dominance, right? So then if these levels are showing you areas where sellers were in control in the past, but then again, what you're seeing right now is buyers attempting to take control back from the sellers, right? This is why I'm optimistic about as long as these levels hold, right? If we lose this, then yes, 2.19 trillion would be next in my opinion. But if this holds, then the next target for me would be back towards 3.01 trillion. Okay. Now, that's not the only thing. If you just switch your time frames, zoom out, right? Don't just be zoomed in on the 4 hours. Zoom out. What you will see is you have a monthly cup and handle retest currently going on total market cap, right? There's your cup. There's your handle, there's your breakout of the neckline, there is your retest of the neckline. And the neckline is already established significant level in terms of whether you just use my own system, you use your traditional support resistances, right? Very, very important neckline here, and it's being respected. It was respected last month, and so far it's being respected this month. We have 21 days left, so of course, anything can happen in the next 21 days, but for now, what's on the screen, that's all I can go off. Right now, the defense is there, right? Buyers are attempting to hold this. Even on the monthly, right? The reason I threw this black line on at 2.62 trillion, even on the monthly, above this area is the area where even on the monthly sellers were once again in complete control, right? And we are attempting to still hold that as support, right? So if that is successful, just think about it in terms of buyers versus sellers. An area where sellers were in complete control over the buyers, supply was completely overwhelming the demand in the past, is now like in an area where buyers are giving sellers a very hard time to actually take control, and the demand here for now is enough to absorb the supply. So unless people keep dumping supply onto the market to overwhelm the demand, if this keeps on holding, you're literally seeing an area in the past where buyers could not see value, right? Buyers couldn't see value, therefore there wasn't enough demand from them to overcome the supply. Now flip into an area where buyers are definitely seeing value, which is why you see enough demand from them to absorb the supply to try and defend this area, right? So we just need follow through, right? On the longer term, if the supply is kept on being dumped, then of course we can very easily lose this. And again, if we lose this, I'm looking for as low as 2.19 trillion to get hit, right? But even on now, if that gets hit, I'm just going to be switching on the time frames, right? That's it. Like as long as your 6 months, right, is above your 2.19 trillion close, your closing candles where you haven't had any, like look at last cycle, no candle body closes within this area on 6 months. Any candle body closes above 2.19 trillion right now, in my eyes, it's long-term bullish, okay? Because your buyers are putting in price action, they're putting in a footprint, telling the market that, I know we weren't, interested in this before, but now we definitely are, right? So that area where you were in control in the past, I'm going to take control now. That's what the buyers will be telling to the sellers, basically, if this were to happen. But this will look much worse below 2.6 trillion, right? Which is why, for now, I really hope 2.6 trillion does get held. If you go and turn 2.6 trillion into resistance, right? if you're not in shorts already, that'd be your next trigger. Either wait for this pump up to like back towards resistance towards 3.01 trillion, or you get that breakdown and you start seeing failed retest of 2.6 trillion, 2.67 trillion. That'd be your next trigger to then just pile into some more scalp to swing mindset shorts. The reason I say scalp to swing mindset shorts is because at the current moment in time, you don't have enough of an edge to get into swing shorts, right? Many things have already dropped very hard, especially if you're talking altcoins, but neither do you have a very, very big edge on opening big swing longs, right? Because trend isn't with you right now, right? So if you open a big swing long and just forget about it, you'll probably get eaten by funding fees before the market even gives you the move you want, right? So which is why scalp to swing mindset, it's a scalper's market, right? No matter which direction you're going, it's a scalper's market. So that is total one, right? A monthly cup and handle, that's the thing I'm watching right now, right? If this neckline flip is successful, then well, the measured move for this, you put it at the point of breakout, we'll take it towards 4.53 trillion, which again, we know if you look at this in terms of this, there's reasons, right? We have ABCDs there, we have a deep crab going into that area, right? So literally, there's confluence with harmonics, with fibs, with wave structures, as to why the neckline target of the cup and handle is a valid one. That's the point I'm trying to make here. So just something to consider. If just a different perspective to look at this from, like a more higher time frame perspective to ground yourself, right? So you're not, absolutely being shafted on like the 15 minutes or the hourly, whatever it is, you're getting wrecked on. So total two. Like I was saying, this looks like the weakest. It still does. You're holding the mid, so that's what we were talking about last time we did the stream. As long as you're below this level, the mid is going to be your next place to stop. You've stopped at the mid, right? If this is lost, you have one, liquidity rate hope at 912 billion. But ultimately, if the mid is lost, I think you just go and rate the lows, right? So I'll be looking at a rate of 755.73 billion. That'd be just give us that, rip the band-aid off at this stage. You know what I mean? That's what I'm trying to say. Just rip it off. But as long as the mid is holding, your target's always going to be higher than it is lower. Okay. Total 2, so nothing's changed on that. Total 3. Now, total 3 is looking a bit worse now than it was when we were looking at it last time we streamed, right? Last time we streamed, you were above all of these boxes. By the time previous week closed yesterday, right, you actually ended up getting below the mid of your bearish order block from history, right? This is your mitigated liquidity pocket, mitigated LP, right? I'm going to write MLP. A mitigated liquidity pocket, your old range highs, not old range, but like, your last consolidation range highs now, you're flipping back into resistance, right? So if the daily, the weekly, whatever you're looking at, if it starts to actually close like this, again, I would, what you do, you can go scalp to swing mindset on shorts on your alts. If there's any alts resistance, you're going to scalp to swing mindset short those alts that are at resistance, not the alts support, the alts that are at resistance. Okay, you still have to be selective. You can't just short any alt just because this is at resistance. Because if there's an alt to support versus one at resistance, which one do you think is going to drop, right? So look for alts at resistance, and then if this daily closes underneath, especially, like, you can try to look for scalp to swing mindset short, scalps to swing mindset, because at the end of the day, there is still a huge cluster over here that is being held, right? So if this is held, this can very easily do this. So if you go scalp to swing mindset, at least if you do get stopped out, you're going to get stopped out at minimal losses, right?
New York just opened, by the way, right, man. We're getting a lot of buying info.
Hi, let's take a
So
look
just
here. Let's 1 second. Okay, yeah.
NQ's not moving much. Neither is Nvidia's having a little sell-off now, but
Oh
yeah, I
yeah,
think
yeah.
Bitcoin's been strongly correlated with the stock market recently. Yeah, you got like a $400 move since New York Open.
Yeah, we're getting some very nice market orders coming in for bids. Let's take a look. Basing off a key level as well, so yeah. Okay. Um, yeah, so as long as you're below the mid of this, right, that's something to be wary of, below this as well. But you're still holding your bullish fair value gap, right? You're still above the mid of your actual supply zone of the previous range, which is why this is, to be honest, if you didn't want to trade this, you can wait for this, right? You're gonna get a cleaner breakdown if you actually use this anyway. So you don't have to scalp anything here. This is just for you, those of you that are, want to day trade. Scalp the swing mindset shorts until you reclaim this into support. Okay, that's total 3. Others. Like we said, if you lose this, the next target I'll be looking for is 7-8, really. Pretty much just here,
Oh my
right?
gosh, look at that New York reversal. Jesus.
Oh my
Nasty stuff.
god.
Oh
Jesus
my God.
Christ, bro.
Jesus.
So many aggressive sells coming in. Holy shit. 83 lots being sold on a 5 minute candle. That's crazy. Jesus Christ.
Insane. That must have been like an institution selling.
Yeah, it must be, bro. Yeah, there's no. That's crazy. Hang on, let me. What's the. Where is it gone? Yeah, those are loads of aggressive longs going into. Or like 12 o'clock, 1 o'clock. A lot of aggressive longs going in. A lot of aggressive bids. They've just been murked. All the trap traders, that's what it is, isn't it? There were longs trapped offside. They made it look like, oh, we're going to give you a reversal just to. Yeah, these have been liquidated for sure. You're going to get another, like, Watch a Guru tweet in a minute saying, oh, 150 million has been liquidated off the cryptocurrency market. Something like that. Wait, don't get back. Previous point of control turned to resistance. Actually, no, you're trying to flip it back into support. But value area highs. Oh, yeah, that's why. Your fair value node all turned to resistance in terms of TPOs as well. The volume wasn't there to back up any bids that were coming in, basically. Okay, back to this. Let's take a look. Yeah, below this, this looks a bit nasty, guys. For total, this is total others, right? Others looks nasty. You have 2021, so basically, hang on, 211.49 billion. That's your line in the sand right now. Below that, I would think you go and rate your range lows, basically 150 billion. If you lose this, you're going to get towards 150 billion, in my opinion. So let's hope this holds and you reclaim that quick, eh? You're at around the 786 right now. Maybe like you get the 886 towards the bottom of this blue box, some sort of intermediary stop there. But yeah, we'll have to do this level by level, right? There's no guarantee it's going to stop over here. So for now, just watch for that 786 slash this 211.49 billion to be respected. Reclaim this zone, you're good to go higher. If not, that doesn't look good right now. At the end of the day, the reason I drew the blue box is under the range, right? Below this, that blue box, you've got support. So, the 886 would be nice if this is lost. But if you come down this low, I don't know why I wouldn't just go and rate that low there. So, yeah, we'll see. It'd be very uncertain if you go down over here. Not much to say there, right? You're below. That's it. Total DeFi, holding, right? So total DeFi is still strong and holding, but now, again, if we get a strong impulse, this isn't gonna last, right? We're gonna get a raid. If we get a raid, you have all this external liquidity, internal liquidity targets to take out over here, right? All the way out to your external. So let's hope this holds on total DeFi. Otherwise, CETUS, even though we've had 886, we're probably gonna get it cheaper. So again, at the actual potential reversal zone, price reversal zone right now, at just above the 618, at the 886, but we're not getting any follow through right now. That's the problem, right? That's the problem. No follow through whatsoever. And others, dominance. So right here, right, if you are thinking of getting into any altcoins, again, my advice still stands. If you start closing candles below this, just cut it, and if you reclaim it, just get back in, right? But we couldn't, right? We had a time frame within which, if we had strong impulses, we could have actually, gone back and reclaimed this trend. We couldn't do that, right? We couldn't do that. So over here, like it's so low that if you're in some alts, you might as well just wait until you get that confirmation to actually cut it, kind of, right? That's the way I see it. But yeah, below this, until you reclaim, I don't see that any point holding, because again, you've got external liquidity you can go and take out very easily. And if you get back into this range, don't forget what happens when you turn the top of range into resistance. If that were to happen, range mid wouldn't be out of the question, right? So around 6% wouldn't be out of the question if we went and actually turned this into resistance. So again, you're holding the levels you need to for now, but it's not a convincing hold right now, right? Total 3 against Bitcoin. Now this one actually looks better. So this is still, right now, this is still indicating that as long as this zone is held, eventually total 3 is going to start getting that rotation in, right? To outperform Bitcoin, get the money flow into total 3 basically, right? Into your coins, into your top 10, top 20, top 100, whatever. So for now, the areas that were acting as the PRZ, the reason you bounced off the low, so on and so forth, all of those have still stayed intact, right? You're still above your PRZ. But if you go and turn, again, start doing this and start losing these areas, then the argument goes out the window. And once again, you'd be back at the range lower than this, and that would not be something you want to be holding alts into, right? So regarding alts, it's still fairly easy to actually get a macro perspective on should it be risk on, should it be risk off, right? Depending on select alts right now, like some alts you might be worth, like I said, 20, 40, 40. That's what I always say if you're building a spot bag, right? 20, 40, 40, and depending on your invalidation, change the ratios. If your invalidation is very close, increase your initial CMP allocation. If your invalidation is like 20, 30% away, then just stick with 20, 25%, right? Because you have a bigger range to play with. But you never want to be fully positioned in a downtrend. This is why I never ever fully position in a downtrend in spot or swing longs, right? That's it. Don't catch a falling knife. That goes the same for DCAs, right? That's it. But yeah, the same level still holding. So as long as this holds on the higher time frame, right? Eventually, what we're saying, time is your best friend here right now, basically, right? Because we are at the levels that need to be held. We're at very significant levels, guys. It's not like we're chilling nowhere. Pretty much any chart you look at right now, you'll know we are very significant levels. So basically, time is going to be a friend here, right? Do not get liquidated on a lower time frame liquidation wick or some sort of chart just for the higher time frame to maintain, hold like a bull and just absolutely send in like maybe a few months. Who knows, right? But until we lose these higher time frame levels, higher time frame looks good, right? Time is your best friend. We just need to see, can the buyers maintain this over time, right? Because obviously the sellers are going to keep on trying to break this down. So it's just an endurance test between the sellers and the buyers now. Who can last longer? That's it. So that's that. We've gone through the macros and total 3 against Bitcoin. Nothing much to say here. Let's take a look. Yeah, nothing much at all. So I think gold definitely still stays outperforming Bitcoin for a bit longer until I see some more data on this. But I think we have CME gaps to the upside now, or am I mistaken?
Yeah, I heard someone talking about that.
Yeah, I think it might be on the lower
Well,
time. Oh yeah, I mean, if that's it, then that's not much, is it? Okay, so the CME gap was here. I mean, we filled the mid of the CME gap. You're rejecting off the mid of the CME gap for now. But yeah, I mean, we've got this tiny little gap left here still. So let's do that. There. So yeah, we do have a CME gap above, but again, we don't have anything above that. So if this is a bearish backfill, then yeah, you've got reason to think, yeah, we're just gonna go lower again. Okay, so let's move on to actual cryptos. I didn't want to spend too long going over this today since nothing much has changed from last time, right? So let's actually go on to now Bitcoin first. So first and foremost, Bitcoin. Right, so in terms of buyer-seller zones and historical price ranges and key inflection areas, below the mid of the key inflection area, any pump into this that is now resistance is a very good short to take. Okay, so 88 to 89k area basically. If you pump up, but then this starts being resistance, that's going to be a good short to take in my opinion. Because again, the new historical price range, you're going to be using the mid as resistance. If that happens, you're going to go down to test the old historical price range. Okay, that's just how ranges work. If we were to do this, I will turn the key inflection areas on. There you go. So there's your first target. For me, if we were to do this, right, go up, turn this to resistance, I'd be looking for Bitcoin to drop anywhere between 73 to 64k, and I would not want Bitcoin to drop below 62k. Okay, so I know that's a pretty wide range, but when you get macro flushes like this, we can't really have a pinpoint accuracy on where it's gonna go, right? Because you have lots of higher time frame levels. You have to go level by level. So you have 73k. You have, basically 69k, 69,200, so on and so forth, right? 68,997. Below that, you have 65,995, and then you have 64,898, and then for me, the final one I'd want is like 62, let's say 500, basically. I hope we don't go that low. Ideally, I want the lowest to be around 68,999, 68,997, basically, right? Something like this, accumulate and then send high is what I'd hope for. But that's if we get there. Right, so maybe we reclaim and go, who knows. But if you do go here and you start seeing SFPs again, right, and again, you don't have to wait for the weekly. In fact, if you're looking at weekly price action, remember 4 hour to daily entry models is what I would suggest. If you're looking at daily price action, 1 hour to 4 hour entry models. If you're looking at 4 hour price action, 5 minute to 15 minute entry models. If you're looking at 1 hour price action, 1 minute to 5 minute entry models, right? So depending on, are you a scalper, are you an intraday trader, are you a swinger, you're going to use different time frames. But like I said, scalp to swing mindset for me right now, so I'm going to be going lower time frame entry models for this. If we go here, um, and we start SAPing this basically, right? We prove this is still resistance, then that is a short. That's another place that would add to my short, right? So the current shorts I've got running are Trump. I've got a ENA short that opened last night just as a quick hedge, but apart from that, it's BTC and Sol. Right, I'm literally only in 4 shorts right now as a hedge. That BTC and the Sol short was on that video I released, right? So it was that I think it was like 2 videos ago. But basically, when this here happened, and I already explained why I took the short there. Is this entry right over here for the short 93,704. The reason for that is the same reason I've been talking about this entire time: diagonals, right? For those of you that aren't aware, if you look at this in terms of diagonals, look, even though this was a beautiful close, and if you were to look at this in terms of simply horizontal levels, right, you even reclaimed the 24, 12-month low, right? Very, very beautiful close in terms of horizontals, but you now extrapolate your diagonals on, right, your actual key trends over time, the thing that has been providing you with support, given that the buyers have enough demand to keep up with it, that the thing that kept you down and kept you from expanding to the upside violently, that was a close below that. So that is the reason. Even though some people ask me, why did you short even though you closed above this, you didn't close over your diagonal, right? And for me, I take very, very great importance in the way you act around diagonals. This was a very important one that we kept looking at every stream. Right, you close below, breakdown, retest, close below, which is why I opened the short and I said, I'm going short here. Same reason for Solana, right? So as long as we're below this now, below the historical price range, ultimately the draw on liquidity for me is going to be somewhere between 73, 757 and 64,898. Right, that's what I want to see get tapped into. We'll see what happens, or either that, or if you reclaim this, I'll be looking to get back up towards 100k. Now you reclaim, of course, you got 93k first, but above that you've got 100k, right? So the important thing is, what do we do if we ever go back towards 89,150 basically? Do we go and flip it into support? Do we act as resistance? 89,180, something like that, right? The HPR 5 mid basically. So that's that on Bitcoin. Let's take a look at Ethereum. Nice little impulse on ETH. Good to see. Ethereum, again, this one held, right? This held your 2030, so basically your key inflection area low. This one held it, right? Another way to look at this, of course, is you can do your, you can split your historic ranges up in many different ways. Another way I like to look at this is also like this. So historical price range 2 got just about front trend. So no matter how you do your support resistances, at the end of the day, you held a significant level. But now what you've done is pumped straight into res. Okay, again, if by the time the daily closes, and in fact you can already see on the hourly, right? Look, where did you go to before you wicked off? The same level I've had in front of you guys for like 2-3 years now, right? These levels have not changed. Just significant levels, that's it. You wicked up, high volume buy candle, rejected, and now you're holding the deviation range allowed within the mid. But again, just that there is telling you that right now sellers are in control of your mid, of your historical range boundary. So if this keeps up, and if by the time the daily closes you close below, right, I'm going to be like I said, I've got a 6-figure position in ETH. I'm going to be de-risking that, okay, because my average right now is below the historical price range too, right? I've worked hard to make sure my average is low. I've not sized up. I'm very patient with my sizing. I've not sized up unnecessarily. Profits have been taken, right? So this is just a moon bag, whatever's left. But I'm going to be de-risking that. I don't care if it's a moon bag. It doesn't make sense for me to hold if you are treating 2150 as resistance, right? And more specifically, if you close below 2030, you guys already know my thoughts on this. There's a very high chance, right? If you close below this, like there's a high chance we can go down towards 1,500 ETH again. Just talking historical ranges, right? I'm more than happy to just add back up again and just create like a new average, right? Should we reclaim? But even if this is just manipulation, if the manipulation is big enough, I would not be comfortable at all, right? So I de-risk some, right? Maybe I'll de-risk like 20% at a close below this, and then I'll de-risk majorly if we ever lose 1,981, because if that happens, that 1,500 to 400 is all but guaranteed in my opinion, if this is resistance as well. So that's just the way I'm going to be tackling ETH myself, right? So that's Ethereum. If you guys want the levels I'm working with, literally 2030.87, 2150.75, and 2282.21. Now this is based off the index chart, So your key inflection area / historical ranges might be a bit different depending on what exchange you use. But for like macro overview trading, right? Because I'm not using this to like scalp or anything. I just go with the index. It has the most data. So that's Ethereum. Let me quickly check back to the chat actually before I carry on, just in case there was any questions. Yeah, bro, 6 figures. Luckily, it's not like I opened the position up at like 3K, right? I've been building since 2022, so it was still a nice profits because when the distribution came in, I took some profits there. But yeah, you know, I would have been way richer had I put down something else. It's what it is. Right. Ondo completed Garly. That's a good question, Betshaker, and yes, it did. Yes, it did. We'll look at that in a minute. So there's Ethereum, and what's next? Solana should be next. So let's look at Sol. So Solana, this long here played out. That was for this one here, so I can get rid of this, right? Solana holding your 2023, 2024, 12-month. And the reason I took the 170 miles, I've got a Solana short from 175 right now. And again, it's the same reason, right? Same reason Bitcoin went and hit resistance. At the same time, Solana wicked up. And even though it was a beautiful weekly candle, you did not close above your 2022 level, right? You have a big yearly cluster, you close below. There is not enough demand here. And you close, yes, you closed above your trend line, but you also closed at a supply zone. Pretty much everything here is telling me, look, this is an underside retest. Right, this is an underside retest of your previous range, right? Underside retest a previous range. So again, there was no point in me hoping for holding this open, thinking we're going to hit all-time highs right now, right? So just scalp the swing mindset, close my long, and then just went and opened a short instead. Again, hit my key level and you close below, right? So invalidation here was very, very clear. If I went and closed above 179, then you just close out the short. That's it, right? Actually, invalidation was super, super easy here. So right now you're holding this, right? In terms of a long, if you wanted to take a long, right? Not that I'm not saying you should be longing, but if you wanted a low risk long, it's literally this. Right? That daily candle hasn't been done yet, so actually I'll do something like that. But that is the long risk reward of 3 minimum. And right now, like I said, scalpers market, so I'm going with risk reward TP first and then levels TP. But something like that's what I'd go for if you really wanted to try and catch a long for whatever reason, right? But just because you're at a very key level, there's no buying pressure come in. So if you wanted to take this, go with reduced position size, just to keep your mental sanity in check. This is something I am very happy I took profit on when we got a rate of that, right? So like I was telling you guys back in September, or even before, so these bids for original Solana bids were given, even the $70 bids, right? These were given back at start of 2024, right? This is my channel. These levels here that were on my channel. 6 figures in ETH, 6 figures in Sol, 6 figures in AVAX, right? So Solana at least outperformed really, really nicely for me. This was one of my biggest bags on the move up. It would have been way bigger had I not fucked up so hard in NFTs, but it's what it is, right? So this one at least made up for what ETH didn't give me. Oh, so AVAX I've closed, right? That one stopped at break even for me. Whatever was left on my bag, so got a lot of liquidity freed up basically over the last 2 weeks, right? So profits were taken from the previous entries, early 2024, the size ups on September 2024. Profits were taken on the move up, and whatever was left, the moon bag, stop loss or break even basically. So AVAX, stop loss or break even. Solana, I've still got positions left because my average is still way lower. But depending on do we lose 120 or not, I'm going to be closing that manually, because like I said on Sol, if we lose this level, just understand Solana is going to go towards basically double digits, okay? 102 is your next key level to watch. Below that is 94, 85, 78, so on and so forth. So this isn't this is very much this is a Hail Mary long if you think about it, in the sense that you're doing this because you realize buyers need to step in here. If not here, then where the hell are they going to step in, right? But that's Solana. To be honest, not performing well today compared to everything else. But PAL, nice. Why? I wonder why. Maybe it's just, if you look at one sec. If you go to this, right? This would be explaining everything. Look, Sol against ETH, still distributing. it's not a surprise we're getting these, like, days where Solana leads and then ETH leads, so on and so forth. We know on a macro, Solana against Ethereum has hit a bearish structure, right? This, for my harmonic guys here, this is a deep crab. Right, so I identified this and shared this when this was over here. So we can see T1 got hit, right? That's when Solana absolutely dropped to 120. We got a relief pump, but we're still coming back down. So again, if this is lost, terminal type 2 is next. That is gonna ETH is gonna be holding up way better than Sol if this target hits, basically. Right, by the time he gets here, ETH is gonna have retained more of his value than Sol. Think about it that way. Plus ETH against Sol. Look, you have your breakout, you have your retest from the falling wedge, right? You have a cumulative structure confirmed, and you're just breaking out. So again, if you go and flip B point on this one, if you go and flip this into support, then the chances of you getting that 886 increases. Right, the chances of getting that target increases. So maybe we are going to see, like, another ETH, when we've already seen an ETH rotation today. But on the macro, right now, from what the charts are saying, ETH is positioned to catch the rotation better than Sol, or rather, ETH is positioned to retain its value better than Sol. Okay, don't get it twisted. I know we all clown on ETH, right? But right now, if you look at what the charts are saying, ETH is positioned to retain its value better than Sol until proven otherwise. Right, so for example, if again Sol against ETH goes, but then it holds this, right? It holds this, and then you start putting in high lows in, so on and so forth. Then you might be like, okay, you know what? Sol might once again start to outperform ETH. But right now, as we speak, at 1:53 p.m. GMT, right? Data on the screen right now, ETH is positioned to retain its value better than Sol. Okay. This right here is Sol against AVAX, another one I was looking at, right? So just because obviously Sol, ETH, and AVAX, those ones were some of my biggest bags. So just looking at the interplay between them. Should I size up on one over the other, so on and so forth? I'm just looking at the interplay between these charts, right? So same Sol against AVAX, same thing, right? We've hit a deep crab, 1.618, 0.618. What this is telling us again is AVAX looks ready, right? If this maintains, AVAX looks ready to outperform Solana. Again, outperform doesn't necessarily mean AVAX is going to pump while Solana doesn't. It could literally mean both are going to dump, but one's going to dump harder than the other, right? But right now, compared against, like, AVAX, ETH, so on and so forth, Solana does look a bit like, like it's positioned to lose its value more. And it's very easy to outdo this. You just go and flip this into support, then all of a sudden you don't have the argument anymore, right? You'd be like, okay, well, this is just accumulated and you're ready to go higher again. But until that happens, like I said, right now, as we have data on the screen, right? Not thinking about what ifs, thinking about what is in front of us. In terms of value retention, I would say Solana looks the weakest, right? Just something to consider, right? And again, these can change in a heartbeat. That's the thing about these charts. These can change in a heartbeat. It's up to us to identify the triggers, identify key levels, and then move with the market. It's a dynamic market. It's not a static market, right? So, as long as if we distribute around this area, we can see very clear resistance in this zone, right? And right now, if we distribute around here, then Sol's going to dump harder than AVAX, or AVAX is going to pump harder than Sol. It's what it is. That's what this is telling you right now. There's just some things to consider, but let's go back to focus. So Solana, right? That's that. We've looked at ETH. So one thing I wanted to look at is Aptos. Okay, this thing has been holding like a rock. If you were looking at this yesterday, bro, ETH was dumping like 8%, and Aptos was chilling at like -3%. It was ridiculous. And even now, you can see this is one of the only charts that is still respecting its setup here, right? Yes, the reason I've not given a buy Aptos call, apart unless, like, I've been saying if you get to 525, buy, right? That's it. Try for your scalp longs back up to the yearly levels, but no big spot entries. Why? Because you're just below your yearly levels. That's it. And you can see anytime you've gone up here, you've just been rejected, right? But Aptos has been, like, especially yesterday, it's been holding up. Today's underperforming slightly, but it's been holding up so well. Even against ETH, right? Against BTC, against ETH, it's been holding up really, really well. And again, the reason for this, if you watched my last video, you've already seen this. I identified this midway through last week. But if you go to Aptos, right? You look at Aptos against ETH. I noticed this, but this is absolutely beautiful. What you have on Aptos against ETH, let me do it over here. One sec. Aptos against ETH has got a bullish bat, right? That's it. It has got a bullish bat right over here. And if you look at the structure you've had, so you completed your bullish bat, your 886 has been hit, you can see that right there. Double bottom at the 886, right? And not just the 886, if I go ahead and turn this for retracement, Is that the one? Yeah, if I turn that off, it's not it's not just the fact you have an 886, it's where is the 886 coming, right? So if you look at the 6 months, this is an area where in 2024 buyers were active in the 6 months, right? On the 6 months, this was an area where buyers had taken control back from the sellers 2 6 months in a row, right? And then you came back down and your 886 was at the top of that 6 months. You already have a support resistance level around which that 886 is coinciding with, right? More than that, you also have a 2024 12-month level just above you, which you reclaimed, right? And if you look at it from that perspective, what you also have over here is if you look at the weekly, if you look at the 2 weeks, right, for example, that is a impulse down, consolidation, impulse back up. That is a liquidity pocket, bullish liquidity pocket. So it came down to all of these bullish areas basically, and you maintained it. What have you done now? You've gone up to your 2023 12-month level. You can see that wick there, right, a couple of weeks ago. You wicked at the 2023 level, and you've just been chopping in between your 2023 and your 2024 levels. Right, so 2023, 2024. So again, if you manage to hold this, you might be putting in local accumulation structure that gives you one last move up before maybe like a deeper pullback and then continuation, right? Because now what I'm looking for is a type 2 return, right, which I would really love to get, because at the end of the day, the 382, your terminal 1 has been hit, right, from the high to the low. The terminal 1 has been hit. So again, from harmonic people, if the terminal 1 hits, then there's a high chance you get a type 2 return, right? If the type 2 return comes, we revalidate the PRZ and then look for the bigger move up. Right, so maybe you come back down, put in an 886 or something like this, right? Maybe you get something like this, for example, from the A down to there, up to there is a 441, right? Maybe you come down and give us a really nice 886 or even a 786, right? Somewhere around here would be a type 2 return. I'm just going to pin the 886 for now because that's the deepest I'd want it to go. If you go deeper, it becomes a shark. To be honest, this would be fine too, right? It doesn't matter if you raid, it doesn't matter if you put a high low, if you put a double bottom. All I want to see is Aptos maintaining its structure on the high time frame against Ethereum here. Okay, so if ETH does now catch rotations for a bit, we might very well see that, right? We might see the raid. Again, that wouldn't matter because the raid scenario would, instead of giving us a bat, it would give us a shark, right? The shark is a raid, it's a 1.13. So, minimum 1.13, let's say, right? Maybe you get a shark, and then after that, maybe you get a 0.886, and then even a 1.13, again, to the upside. Right, like this. So, something like this could be very possible on the higher time frame. Right? And if this were to happen, there'd be a moment where you'd be like, oh damn, okay, Aptos is what I should be into. Let me take profits off ETH, let me reduce my ETH holdings, and then shove it into Aptos, right? That's what you're looking at. But Aptos right now is building very, very interesting structure against Ethereum until proven otherwise. You're at support right now, even as we speak. So this is definitely one to watch. Because even yesterday I was noticing, right, everything was dropping very hard. Aptos was holding like a rock yesterday. So, the macro structure is still probably not done, right? You probably do still get a type 2 return, right? Which is why I'm saying, I love it. Even if it's a raid to a reclaim, amazing. High or low, amazing, right? But ultimately, like for example, we have something like this, right? You could have a potential bat, give us an 886 right there, right? So you have reasons to have that, type 2 return in this area, but just keep an eye on it, right? Just look at those levels, get this down for yourselves, and then if anyone's ever been interested in Aptos, you'll know. Basically, when the rotation goes into ETH, right? How would you know, should it be an ETH or should it be an Aptos? Which one should it be heavier in, right? Basically, you're asking yourself, okay, if I'm going to trade, why would I not trade the one that looks ready to outperform? That's going to move harder, or it's going to retain its value better, right? That's what you use these for. But Aptos against ETH looks absolutely phenomenal, right? No joke, it looks really, really good right now. So that's that. And Aptos against BTC, another interesting thing, you went and literally raided all-time lows, right? So unless you're saying this is going to put a new low in, it doesn't get more low risk than this, right? You went and raided the all-time lows. Now, of course, this is higher time frame, so we want bottom structure come in. There's no structure yet, nothing, right? You just got to impulse off the raid now. So, if you break down and turn into resistance, not good, right? You're probably going to go put a new low in. But if you can come and confirm a bottom here, so on and so forth, and in the future go start reclaiming these areas back into support, this thing's going to send as well. Right, so Aptos is definitely one to have on your radar, in my opinion, guys. BTC, let me take a look. Oh yeah, we've been slipping. God damn.
Yeah, price has been nuking 81k.
Yeah, but there's so many aggressive sells coming in. Like every single 90, 72, 96 lots. Jesus. 74 versus 33, 63 versus 21. 34 versus 16. Yeah, I don't think that I've seen a single one where buyers have shown. Maybe this one here. But apart from that, yeah, this is very, very aggressive. This is nasty. Well, I missed the scalp opportunity, is what it is.
Yeah, I know. I was looking for a short opportunity, but I just missed it when it came up to 82.7.
Yeah, bro.
It's
This is nasty work. Okay. Um, let's look at some more alts, and then if you guys have any requests, we'll look at that as well. AVAX. Hang on, go back to this now. AVAX, like I said, if you lose 23.58, which we did, you're gonna go down to 17.29, right? You're nearly there now. So let's see what happens. You can go even a bit lower than a 17.29, doesn't matter as long as the macro 886 is respected. That's what I want to see hold the most, right? If I open up group one, this right here. So that 886 is around 15.20. I do not want to get, I do not want to get below that, right? If you do get below that, you're going down to $10 on AVAX. I don't see any other way around it. You're going to go down towards $10.90, $11 basically on AVAX. And on the macro scale, you still be fine because this will still be one big type 2 of your actual harmonic, right? Which is what where is it? I think it's macro. Yeah. So that macro harmonic, which is what we had an entire site set around. And right now, you're still at your macro point of control. But you can see if you lose this, like, yearly level wise, your different standard deviations of your fixed range volume profile wise, STD1, STD2, 3, and 4, they're all at $10. $10 or lower. So if you lose this, the only hope you have is that 886, right? You want the 886 to hold and reclaim this level ASAP. Otherwise, yeah, $10 AVAX. Some massive sort of type 2. And then after that, maybe you're going to send it. But yeah. AVAX again are very, very key areas, right? And again, on the lower time frame, you can scalp this because I don't know, when you have yearly levels, hardly do they actually nuke it in one, right? This hasn't even been tapped yet since the August 2024 tab. So if you just come here, but then you start to see like lower time frame reclaims, you can take scalp longs, right? You can keep scalping this area for longs as long as you're above 17.29. Okay, for scalps it's easy. You close below on a minute, like you get below and you take out like 3 minute, let's say we close. You just get out of your position with scalps, no DCAs. Or the person with the back to do things, no DCAs, no nothing on scalps, right? With scalp, it's one TP, which is going to be your actual target. It's one entry and it's one strict stop loss. That's it, right? It's not like a swing where you can give yourself the higher time frame benefit of the doubt, right? With scalps, it's in or you're out, especially if you trade with size on scalps, which is personally what I do. You're in and you're out because your risk management is easy to manage on scalps. You just need to be disciplined. You can't be like, oh, I'm just going to hold it because it might reclaim. No, if you're in the red, just cut it. Just cut it. That's it. You get another chance. It's the lower time frame. Okay. But if you are going to be scalping this area, 17.29 is your line in the sand. As long as you're above that, look for moves to the upside, right? TP based on risk to reward. Screw TPing based on, oh, I'm going to wait for $23 to hit because, you might chop a million times before you hit this. So for scalps, just TP based on risk to reward and just rinse and repeat. Have a different portfolio for scalping on swinging, right? But yeah, that's AVAX. So let's take a look at next Say, right? Another one. Say coming down to very, very crucial areas. You're losing your 2024 12-month buy zone low. Below this, the next yearly level you have is all the way down at 6 cents. So this is not a level realistically you want to be losing, basically. Right now, you do have a fair value gap area over here. A bit of his field, so I've only marked a bit Dyson field, and you also have hope in the form of the macro 886, right? So if you go from the external low all the way up to the, right, let me make it easier for you guys. Let me just do it on a separate chart. Hang on. Say there. So this is your old harmonic and the chart. And for now, right, it doesn't matter if you do wick because on the higher time frame, if you can maintain this, it's still going to be a type 2 return of this harmonic, right? That's the important thing. But over here, what we do also have is now, if you hang on, low, right, high, high, low, higher, high, i.e. your rate, and therefore your 886 of the shark is right over here. Right, so let me go ahead and turn the other harmonic off once there. So this is the pattern basically I'm talking about. If you can somehow, because right now it doesn't even look possible, but if you can start building higher time frame bullish divergence across these two, right, is it possible? No, it's not. That's the thing. It's not possible. So we need more data to come in, basically. But yeah, that 886, you'd want that 886 to hold. Now, of course, I've already I gave you guys the short up here for say back in December, right? This say hedge up here. Because what did we say? That bullish bat went to, sorry, the bullish shark went to a bearish 5-0. You hit the 0.5, you distributed. Right, this is what we talked about. I said, do not be surprised if you get a type 2 return here. Right, this is your type 2 return in progress now. Right, and the beautiful thing about this now is, what I can also do is going to be a bit too many lines for most of you probably, but so let me just at least take the ABCD off. That should make it a bit easier. There, if you take the ABCD off and I actually go off and, for example, right, if you take that to the peak, right, that was 0.566, doesn't matter. For a shark, right, it's 1.13 minimum, right? So here, if you get any sort of wick below, right, if you get any sort of wick below that macro shark 886, right, you are looking for a 1.13 rate to hold, right? You want this rate to hold. You don't want it to go much lower than this. You want it to hold, right? 1.13. You want that to hold because then you have on the macro, you have a rate of your original harmonic lows, and then from that you want a swift reclaim. If that happens, you've got your type 2 return, rate to reclaim. That's a valid type 2 return. A cumulative structure at the lows. You've got your bullish harmonic leading to a bearish 5-0, which is setting up actually for a again bearish shark. And more importantly, you have a valid wave structure present, right? Again, a potential one still, because the harmonic hasn't actually completed, but you have a potential path for the wave structure to take you now back towards your actual target, right? But all of this hinges on, do we, firstly, do we, if you hold the 886, we're not going to get that anyway. But if you lose the 886, that's the only hope you have, right? Go to that 1.13 and raid off it. Raid, ping, reclaim this level as fast as you can, right? Ideally, you don't lose the 886 in the first place, right? But if you do lose it, that's what you're looking for. But say is another one is, at the range extremes, right? It's very much at the range extremes. So if we can defend this here, or if you, for example, if you go and see a reclaim of 0.2026, again, scalp the swing mindset. You can try and scalp longs back up towards this area here. Try and scalp longs back up towards that area, because at the end of the day we have a range here now, right? That is your range. So from range lows to range highs, you can try and scalp longs up to the range mid and then to the range highs, so on and so forth. But only long if you reclaim 0.2026. Below this, I will not touch say as a long right now. Right, wait either until new price action comes in around 0.1752, the 886, so on and so forth, until the yearly is reclaimed. Right, no point trying to long below key. At the end of the day, look, support, resistance in the past. You don't want to be longing below this. Okay, so as long as this is like this, just wait until 2.2026 is reclaimed. On say, SWI, I think we're going to get the 886 soon. I don't even know if the 886 is going to hold, because if this level is lost, your next target is all the way down towards 164. You have nothing significant, right? So lower to higher, standard deviation will value area high, right? So this is for the bullish impulse, bearish impulse, so on and so forth. I've got these on the left. These are my buyer seller zones, right? And on the right, all of these basically right now, all I've got here, these are now volume-based support resistance. Okay, so your fixed range volume profile, session volume profile, whatever, like value area highs, lows, point of controls for different standard deviations as well. That's what I've got. So what you can see here is the lower to higher. Standard deviation 1 value area high was flipped to resistance, and we keep bouncing off the original range, so the range all the way back from over here, right? This range before you broke out. The standard deviation 3, right? The 2, so your 3 lies between the 3 and the 100 basically. The standard deviation 2, you've got these as targets, right? Right now you're bouncing off this and the yearly level, but you're turning this to resistance very clearly. I think we get that wick down towards the 886 soon, and then we can reassess what happens there. Because if the 86 holds, and again, you see basing coming in, you see buys coming in, a cumulative structure, we'll have an argument to at least try and attempt trades, right? If not, we just wait for it to slip lower again, and then we buy at lower prices, is what it is. But a very, very important area, however, hopefully you guys are aware of that, because if you look at the monthly, once again, look, breakout, this is your retest, ongoing, right? So if you're going to get a successful retest, it's going to be somewhere around $2, okay? $2, and lowest I'd want this to retest right now is $1.90. Right, so that's that. And then, below that, literally, you're retesting this wick at that point. So it's going to be $1.38 to, $1.64, somewhere around that area. But SWI right now, basically, it might seem like a good idea to buy right now, right? But let me tell you this, it's going to be very beneficial for you to at least hold out some more, right? At least hold out some more. If you've been patient enough, hold out some more. This is not a price action you want to be buying into. Look at the weekly, look at the daily. This is not price action you want to be buying into, right? You're not on the right side of the V. Your trend isn't with you, right? You're trying to catch a falling knife. If you're desperate for a position, right? My own strategy, you guys know what it is: 20, 40, 40. 20% CMP, that's all you're going to put. 80% you're going to leave in cash. 40% for DCAs, should you go lower, or should you reclaim local resistance and support. 40% strictly for when trend is back in your side. When you take out the last lower high that led to the lower low, put a higher low in, then at least you have a reason to try and be in a position on this, because then you're on the right side of the market, right? Until all of that happens, you can see none of that is just scribbles on a chart for now. None of that's actually happened yet. Do not risk your capital for no reason. Right? Just not financial advice, of course, but I'm just telling you what I'd be doing. Right? Unless if you've still got positions on sweet, right? The only way you chill right now, right? The reason I'm very, very I'm not bothered by sizing up is because we originally bought sweet down over here. Right, September 2024, the harmonic setup video is what we bought sweet on, and yes, we took profits up here, but I've still got a moon bag open on this, right? So all I need to do is size up. So I'm not going to ruin my average for no reason. Right? I'm going to make sure I'm on the right side of the market before I bring my average back up to catch the next leg up. That's the only reason I'm saying play this carefully, especially if it did enter with me back in 2024 last year, right? At September for the harmonic setup video. Otherwise, wait for basing structure to come in, and when the basing structure comes in, I'm going to open a new swing long. Right? I'm going to be opening new trades here, but it's not there yet. Right, the basic structure isn't there. There's nothing looking at this you can say, okay, look, buyers are showing strength. Sellers are trying to take control, but buyers are making sure they're not being rewarded. Sellers are being absorbed. None of that is here. If anything, buyers are clearly being absorbed. Right, so this is not something you buy long into. Let's just take a look here. Just free falling. It's crazy. And then yeah, I think okay. So that's say AVAX. We've done Aptos. We've done ETH. We've not done ETH and BTC. We'll look at that in a minute. Injective, we've not done injective. Look at that in a minute. Yeah. So Trump next. Trump has a hit. Oh, nearly. Okay, we're front run it for now, but this is resistance. You've got one line of hope, like I was telling you guys, right? Trump. I'm going to try to build along on this at 10.223. Again, I'm not going to limit this. Okay, I'm not that crazy. It's 886, but there's no historic price action there, right? Even if you were to limit this, I'd limit like 20% max of your position size. 80% is to be added with confirmation. But 10.223, where your 886 is, where your bat is basically for Trump. Again, for those of you not familiar where I'm getting this, X, A, B, 0.5, C, D, right? 886. If we can, base around this 886, even if we go lower, right? If we create some sort of, cumulative structure here, like this, right? Reclaim, start grinding up, basically confirm this PRZ to be proper, then I'll start looking for some plays on Trump with a bit more higher time frame perspective in mind, right? But until then, or until that happens, maybe something like this, for example, right? And then reclaim, break out, up, and then maybe something like this. When you see something like this, this is the side you want to start building positions on, not here. Right, this is where you get initial buys in, if anything, right? But your majority, your size up, your trend shifts are going to happen here if you're positioning for the upside. So, but all I'm saying is we are coming up to a key area, 0.886 key area. Let's see what happens, what kind of price action we get on Trump. Ondo, now someone mentioned this. Was the Gartley hit? Yes, right. This setup was given in a video I released as well. I believe this was the same one as the Bitcoin one. So the Ondo short played out this one here. This was just a hedge, right? Risk reward, like I said, scalps just literally go by risk reward. Risk reward of 3, done. Take profits, either fully close, or if you think it's gonna go lower now, just leave like take out 80%, leave 20% or something like this, right? But this one has played out now. But yeah, the Gartley has completed, and you've gone below the Gartley for now. Now the question is, what about if I've drawn the box like this? Surely, where's the ABCD? One sec. Let's do this bit by bit. So we have get rid of you, and you. You're fine. The Gartley 786 is right over here. For someone's asking, has the Gartley completed an Ondo? It has indeed. Oh, that was nearly highball in that. One sec. there. So there's your godly PRZ, right? So if you were to reclaim this, you might not get this, but um, what I really want to see this hit, the thing I really want to see hit right now is these, right? You have so many wave structures up over here. Let me color code this so you guys don't get cross-eyed. So this, let me make it black, and the text I'll make white. There you go, right? So there's your shark in black, right? Your bat is in white, and then your ABCD, I will put that in yellow. There, right? So three different wave structures. Your shark, there's your 886. Your bat, there's your 886. And last but not least, your ABCD, right? A, B, C, D, there's your 886. So we have a lot of PRZs around this area. Right over here, from that to that, that's a really, really nice area for me to consider picking up some Ondo. Ondo is one of those spot bags where I luckily got in very early, 20 cents, right? My friends put me on this proper early. So I've genuinely not sized up on my spot bag at all. I've just been taking profits on the way up. Simply because, you know, that we haven't had a macro environment yet where we could question the top of the market. Right now we do, right? What if a distribution comes in on total one? Then you could be like, oh, maybe we're gonna get a deeper pullback than people think. So now it's like I'm looking for areas to actually size up if you get the chance, right? Otherwise, I'm not going to be doing so. I'm still going to stay a bit patient on this. Ondo, this is literally a BlackRock coin, right? I think this does very well. Whenever we get money rotation into alts, this does very well. I want this, right? I want to, I want to size up on this. I want a good average on this. And I want to hold this, right? So this is something I'm very interested in. So I'll see what kind of reaction do we get here. Ultimately, I would not want to lose in this case 0.61, right? Even though that's the PRZ, I wouldn't care if it got some lower time frame raid. As long as, you know, we ended up reclaiming this, right? Validated the PRZs again, then we can look for the moves up. I'll build on this side, right? And size up on when this gets reclaimed, because then you're back up to this side. But below this, right now, let's wait and see. Do we get that level or not, right? Right now, there's no point rushing into a position. Again, if you're very desperate for an Ondo bag and you feel like you just can't wait, you can't control yourself, 20%, don't add any more than that. Leave 80% on the side. Okay. Okay, so that's Ondo. Let me take a look here. Jeez, oh my god, 79 got hit. Fucking hell. Insane amount of selling pressure. All market sells as well. That's the crazy thing. So all market sells at this area. Yeah, crazy. What can you say, right? Mad. Hype. Okay, below 15, like I was saying, the area I'm interested in is 13.28. Below that, whatever, right? 786, so on and so forth. We're at around the 618 right now. The 618. So actually, let me do this. Let me go ahead. And let me do this, click on this, and we go on settings. This is 15.11, right? So I'm going to go ahead and put a pin down. Where's the B point? A B is right here. And this is your 0.618, right? So below the 618, of course, we can take it to the 786. So let me click on this. Unlock it. So if this were to get lost, 707 actually is a shout. So that'd be the next one. I'm going to put it at the 707 next. And if the 707 is lost, right, this one, it would act as a nice liquidity rate to the golden pocket as well. So basically between the next target for me on this shit heap that is called hype is between sorry, 0.707 is between $12.18 and $13.28, right? So literally just this box here. If you can base around here, then there's a reason why, right? So in my system, there's the liquidity rate of the golden pockets lining up over here. You would also, you'd have a 707, which would lead to a potential wave structure. You have a 2024 12-month macro read buy zone mid here. Even though it's not a yearly candle, you can call it a monthly candle. Since the 12-month technically does give you data, I'm just calling it a 12-month one, right? The mid of the area where buys are in control basically for this candle are lining up in this area. So in terms of support resistance, in terms of fibs, in terms of wave structure, there's an argument to be made why bottoming out here would be nice. Right? If you lose this, you have one argument for the 786, but realistically, in terms of wave structure, I'll just go for the 886 here. So, that's it for hype. Let's see what happens between this zone. I'm not asking you to set limits here. I'm just saying, just like we did for the projection of total one, right, before we topped out, this is a projection. Watch to see what kind of price action comes in here. If the price action validates your thesis, that's when you get in. Otherwise, you don't get in. Okay, hype. Let me check back into the chat real quick. The dippity dip dip kept on dipping. Yo, sub tip, how you doing, bro? Yeah, Van Ree is absolutely dead. You know, we attempted this twice, and twice we were in profits. And I'm just glad we went stop loss or break even at the end, right? So we made some, or should have made some money on it if you followed my videos. It was nowhere near enough, or it was nowhere near what would have been if it actually played out. But at least we didn't lose money on the trade, right? But yeah, this is nasty work right now, Van Ree. You are at, take a look where you are. It doesn't, it's crazy. The beautiful thing here, however, is if buyers do manage to retain here again, you have the argument for a higher time frame smiley face. But you know, let's see, right? Let's see. Did we even hold this level? Let's wait and see first. That's it. Van Beek died, bro. So did Inge, bro. Injective. This is such a this looks so fucking good. Look at this. Just, I mean, you guys are aware why I thought this looked good. The structure here was to die for, bro. Previous all-time high. Sellers were in control. Buyers kept accumulating, right? And you got that move up, right? Again, good thing we took some profits here, right? Because we hadn't gone risk-free. Boom, straight loss. It's what it is. You know, sometimes all these accumulations come in and they don't necessarily lead to expansion, right? And as a trader, these situations like these are something we have to adjust for. You can't account for everything perfectly, right? It's what it is. But injective is coming down towards our next key areas. If we, I would not be surprised, in all honesty, if injective, right, we're very close to the 3.618. So the first target again, $8.59 to $8.24. We're very close to that, right? We're at the bottom of this gray box that we had marked out. Previous, cup and handle area right over here, right? You have the neckline. Oh, is this a neckline retest? Are they giving us a neckline retest finally? I'm kidding with you guys. I wouldn't put much weight on this now. But at the end of the day, if this zone does hold, we're not going to go lower. That's the thing, right? Because historic price action tells us every time you've been above this, look, I can extend this to the left. Every time you're above this zone, you go here minimum, right? Back over here. So if this holds, you might be able to catch a scalp to swing mindset trade up to here before you get that one final flush maybe. But again, this is what I mean. That's why I suggest go scalp the swing mindset, right? Go onto the daily, go onto the hourly, and see what kind of reaction you're getting. Look, you bounced off the low, went to the high, back down again. If you put a higher low in here, in fact, look at this. Here is your buyer zone on the hourly. You're at the mid of that, right? So if this holds, you have an hourly accumulative pattern, and then that could send you a bit higher. So these are things to watch for. So even in 30 minutes time, if the 30 minutes closes like this, you might be able to try and attempt, right? And the question is attempt a low risk long, because invalidation here is ridiculously obvious, right? 1.87%. Even in terms of risk to reward, back up towards highs minimum, right? And again, if your lower time frame, for example, harmonic were to play out, there's your B point there. That is a 786 basically, right? Look, you've got a 786 retracement, so you might get an 886 before putting in another lower high and then rolling over, right? So then ultimately you might be able to pull off a trade that looks like this, right? You've got 4 minutes before you can make the decision, right? Whether you take the trade or not is up to you. But at the area where we currently are at the end of the day, it is at the end of the day very important support for injective, right? So as much as shit as the chart looks, this is an area where trying for a long, if you get the chance, makes sense. However, if you lose this and you were to go up and you were to start turning the mid into resistance, then perhaps you get that one more flush down, and that flush down takes you to maybe this area here, the 3.618 and the 8.24, right? So basically $8.59 to 8.24, because if you lose that, like I said, you're going to basically towards $64 in terms of key inflection area, in terms of wave structures. Everything is pointing towards there, right? So at the area where we are is very important. Especially if you're a day trader, just pay attention. That's it. Just pay attention, because these are the areas where you can catch some really nice unexpected reversal moves. Because at the end of the day, look what's happened. Liquidity got taken, right? So there's been liquidations here, and then if you close above, it's a low risk trade, right? Because if you start trading below the mid, I'll just cut it. That's it. If you wanted to play even tighter, right? So let's say this 50 minutes / 30 minutes closed above, you could enter a trade. As soon as you get 3 or 5 minute candle body closes below $9.65, you can just cut. Risk to reward even better, right? Lower time frame, this is literally what I'm doing. Very, very dynamic, right? But you've got a potential trade you can take here. If the 30-minute agrees, if you want to wait for the hourly close, that's on you. But then you might miss like a nice entry. So what you could do is, once the 30-minute closes, you could open like half your position size or something, right? And then wait for the hourly to close to add the rest. Because if the hourly then, if this 30-minute closes like this, but then the next 30-minute goes against you and the hourly ends up being red and closes below, at least you went in with your full position size. So even on an already risk managed trade, you manage your risk even more. And that's what trading is all about, just ways to manage risk. People think the only way you can manage your risk is one entry, one DCA, another DCA, and stop loss. There's so many different ways you can manage risk. Okay, there's literally a million. You just got to be able to think about it. So if you want to trade, that's how I'd do it. I'd go for a 30-minute initial entry, right? Maybe 40% if you're not even happy with 50%. Wait for the hourly to close in 32 minutes time. If the hourly closes above the mid, then size up. Right, that's it. If the hourly closes below the mid, right, so somewhere like this, don't do anything until you get a flip of the mid into support, then size up with the remaining mid position size there. Ride it here, go risk free, and then try to ride it to D. Easy. So you guys have entry, right? And the 30 minutes not closed yet, so you're not going long yet. Remember, 30 minute to close. We got 1 minute left. But once the 30 minute closes, right, you'll have I've described to you guys how I'm looking at normally trading, right? So hopefully this helps you guys understand my methodology a bit more. Very dynamic, very looking at what's the price action telling me, right? But let me go back to the chat. So we'll look at you. No, I've not got any limit orders for now, brother. I'm just gonna market buy. I'm just gonna set alerts and then market buy some alts. I'm gonna, for the second half, right, for whatever liquidity I got freed up by closing in profit or getting stopped at break even, I'm going to use that to just gonna size up on a few coins now. I'm thinking ENA. I'm thinking a bit into Farcoin. I'm thinking Ondo, obviously size up on my Ondo bags. ETH against BTC, you guys know that. Sol, AVAX, things about like that. Right? Yeah, we'll look at ENA, bro. Nasir, how you doing, brother? Hope you're good. We'll look at ENA. But yeah, Sui, Cetus, a few coins like that, right? I'm not going to limit order anything right now, though. But yeah, 32 seconds. If you close below the top of this box, whether you take instead of doing a 50% entry, maybe do a 25% because you're below resistance again, right? But right now it's very, very strong selling pressure. So it's up to you. If you close below the top of this box, it's up to you whether you enter or not. Okay. The stop loss would still be the same, right? Something like this. If you wanted to widen it, it'd be this, right? Either way, no matter what stop loss you took, as long as you're below the top of this, instead of going with a 50% entry, I'd go with like maybe a 25 or a 30%. And if you flip this top into support, size up again, very reactive, right? So there you go. If you want to enter, now's your chance, right? Don't hesitate. If you're going to enter, this is your chance. And then, either stop loss like this, or if you want something tight, but more prone to getting stopped out, something like that. Because if it's a 1% risk, right, you're not risking much, right? And you don't go all in straight away either, remember. Because you're now below the top. So if it rejects from here, you're going to nuke. That's it. But yeah, let's look at what was next. Let's look at Doge. Doge is at here, right? Doge is at the second box. So I was very, very hopeful the second box would get hit. It has. If we can now hold this second box, absolutely amazing, right? Because again, on the higher time frame, look at the monthly, look at the 3 months, look at the 2 months. What do you notice? Right? Look at the 6 months even. What do you notice? These are the areas where you've had resistance, support, resistance in the past. So if you can again go and flip this. Right, look at the 12 months. If you can flip this into support, we're at a very, very nice area. Right, at the end of the day, look, support, 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 resistance, support, resistance, 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 support, resistance, 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 support, resistance. This is one big zone, right? I just split it into two because that one big zone is absolutely huge. There's no way anyone's managing their risk properly in that. So I didn't want to just leave one big zone on and tell you guys, yeah, just buy here, because that's just, buy where 21 cents or bloody 14 cents, right? 50% discount. So just split it into two boxes, right? So this box, no reaction whatsoever, so nothing was to be done at this box. Now we're at the second box. Let's see what kind of reaction we get over here. So that is Doge, right? That's Doge. If you lose this box, I want to see a raid of the 886 and then reclaim the box. That reclaim is going to be your safe entry. Okay. And last but not least, PAL. This looks nasty. Yesterday's weekly close was nasty, right? So this is something I got stopped out at a break even on my remaining position. So there, again, the initial position was September entries, right? We had a really nice run on this. The original was, it wasn't even September entries actually. This was literally November, because we identified it after the 886 hit, and then we closed above, right? So this was the entry. We had a 252% pump on this. I took some nice profits on this one. So now at this particular point, I think I'm just gonna watch to see, do we get this shark on PAL. That's it. 1.13 is around 0.03 cents, right? And then just slowly start building positions here based on the reactions, because we'll have all of this to reclaim before we even think about going up on this. Again, it's like, this was looking so good. The 86 was looking so good. Hey, you just couldn't get follow through. Buyers weren't being rewarded. That's when I say buyers or sellers being rewarded. This is what I mean. Like all these buys, they kept attempting, but they're being rewarded. No, at the end of the day, kind of body closes below your key area, right? So PAL, I'm going to be patient on this. Either now I wait for the reclaim, right, or I get that D. Is what it is. Okay, let's take a look at a few more. So focus V2 LDO. Okay, we know we're below this. Below this, are saying wait for the wait for the harmonic structure. We have the 886 on the bat right over here. The 2.618, your PRZ is right over there, and then you also have a bullish liquidity pocket just over there. So perhaps something like this, right? If you get a price action that looks like this, ultimately looking for a base around the PRZ, that's going to be a safe entry after you've rated everything, and after you start to recapture, right? Buyers start to show aggression, and ultimately after your trend shifts is when you want to do your final size up and then just hold again. The LDO, 81 cents first and then 62 cents, so on and so forth, right? The targets are on the screen right now for you guys. It'll be on the video as well if you want to look at this on your own time, right? OP, absolutely dead. Right now you have a macro shark on OP. If you take a look, X, A, B, C, D, right? The 886 of the shark is basically where you sat. If you get below this 886, then of course we can go lower, but the 86 is a nice round ratio, right? That's just why I'm holding it to the 886 for now. But now you're below, you're turning your 2022 into resistance. Look, what have you done? Once again, went above, turned it to resistance, right over there, right? It's resistance. You have distribution going on at your yearly level on the lower time frame, right? So then you've got the dump is what it is. OP, right? ETHFI, am I going to look at this? I think you're below all your standard deviations. Yeah, you're literally below. Not interested. OB, not interested. Absolute death, right? Shitcoin. Until this gets reclaimed in the future, this is a load of wank. This is shit. GMX, same thing. Not interested. AVAX, very close to 17.29. So interested. PAL, like I said, interested in either the reclaim or the D. CETUS, the next one. Okay, the macro 886 for CETUS has hit. You have completed a wave structure, right? We've already looked at this before. So now, again, you don't, if you're going to enter here, 20 to 30% CMP, right? I would leave literally in terms of, okay, how would you, if you entered here, where would your invalidation be? My invalidation would be like this, okay? So if I was to literally put a P&L card down, account for previous structure, so something like this, right? I'm dealing with a 17 to 20%. I'm happy with a 25%. I'm happy with doing a stop loss this wide, right? If I was to properly try to build a spot position on this. Now, this is not something I would do right now because of the weakness, right? So then you bring it down, but this box here, right? If you're swinging this is a SWING. This is not a lower time frame entry where you manage level by level. If you simply want a way in which to manage your swing, your stop loss is going to be anywhere basically between 17.32 to 25.5% away from your current entry, right? So if you are planning to go with a setup like this, where you have a 25% drawdown possible from your key level, then 25% is pretty big. I'd go, anywhere between 20 to 30% CMP entry. You're leaving between 70 to 80% to size up with in the future when the trend shifts, when local resistance gets flipped to support, or to DCA with when it gets lower, right? Remember, 20, 40, 40 CMP entry. This is to DCA with / size up with, right? This is to strictly add on a trend shift, right? When the trend goes on your favor. Otherwise, you're catching a falling knife. So, CETUS is what I'm very, very interested in. I think this definitely goes lower, so I'm going to hold out for now until since I think it goes lower. What I'm personally going to be doing isn't just buying spot here. Okay, I'm going to be I'm going to have my CMP entry for like 20%, right? But apart from that, 80% of my CETUS allocation is going to be on the sidelines, right? What I am going to be doing is trading this right level by level. As long as we're above this, right? I'll have a leverage account, or even if not leverage, even literally with just spot, I'll be trading this, right? Again, if you're trading with spot, don't do it on the same account you invest in, right? Trading and investing are two different things. Let's say you have an account that you want to hold until the quote unquote the market tops out. You want that account to be different to one that you're going to TP on if a 20% move comes. Right, so on my spot trading account, I will then be buying CETAs with absolute size, right, at 0.08558, for example, right? And I'm not going to be doing that yet. I'm going to wait for some more candles. I'm willing to be patient here. But the reason for that is because if we lose this, I'm going to treat it like a leverage play. I'm just going to cut until the next key level gets hit or until it gets reclaimed, right? So I can manage to do that. So which way you decide to go down is completely up to you. You can decide to just go down for that one entry where, you have that 25% risk tolerance. You're going to build your position over and just do it slowly over time. Or you can do it like me where, until your higher time frame structure shows you're ready to absolutely boom and buy show strength, you just trade before actually building spot, right? Completely up to you. But the key thing here is CETAs is at very, very key areas. That's the key thing. So I seem to have. Why did I put this down here? One sec. Why did I have this? Why? 6 months perhaps? Nope. 12 months? Nope. Weekly then. I've got no idea. I'm just going to turn these off so you guys don't get confused. For now, I mean, at the end of the day, if you lose this, I think it should be pretty obvious where you're going to. You're going to be going towards this demand zone right over here, right? So that'd be your next target if you get below this level. So, do with that what you will. So, very easy, yeah. But yeah, CETAs, very, very important area, very historic area as well. You can see this is definitely, it's repelled to the upside off here before. So definitely want to keep in your guys' watch list. This is going to be my DeFi play. ENA, now this one looks very, very good. Very strong as well, right? Even with everything dumping, ENA is not doing much. In terms of dumping, it's not like losing its value at a rapid rate. SFP is off your ABCD 2.0 for now, but the exact same thing. Right, I've got two different plays open on ENA. One is a leverage trade from 0.35, right? And 0.3506, and the other one is a swing position that I've decided to build from 0.34 something, right? That's low leverage. I'm not going to be sizing up on the swing until we either shift trend, like I said, and start putting bullish structure in, start reclaiming some yearly levels above us, or until we come back and at least flip this macro point of control back into support, right? Otherwise, I would not be surprised if we get some more impulses down on this. The 886 of the BAT, the 3.618 of the ABCD haven't been hit yet. You're still treating your supply line, your ABCD 2.0 as resistance for now, not support. So the argument is there as to why we could go lower still. So for ENA, bro, if you're not already in, I'd say wait for this. Either you wait for the breakout retest of that trend line / reclaim of the 2.0, right? Or you, locally speaking, for a lower time frame trade, you wait to see do you get a successful retest of your macro point of control, which is currently at 0.3942. If not, you're going to get the BAT between 0.3238 to 0.2995, 2996 sort of area. That's it for ENA. Sure, brother, I'll take a look. ENA been doing really, really good. It's been holding like crazy, exactly. Aptos was doing the same thing yesterday, right? Aptos was doing the exact same thing yesterday. We're just seeing a little bit of weakness on this today, right? That's it. Okay, guys, so you took the inch long. Hopefully it plays out. I've not taken it because I'm in a position. Plus, I'm going to be very, very busy today. I will not have much time to monitor. But if it goes well, just let me know. Put it in the PNL section, right? But guys, that's everything, right? Look, Nia, Pepe, yeah, these are still things to watch. Add key areas, right? You guys know. Things I'll go over. I'll do another stream, right? Things I'll go over next time. Why I still believe Monero looks fucking amazing, right? I've told you guys this before, right? I've been talking about this for a long time. I think this looks really, really good. I'll go over a few other coins like Toncoin, right? Just watch it for the retest here. But yeah, apart from that, one more thing, Tara, right? I think Tara looks very strong as well. So these are just coins you should have on your radar, okay? And if anything serious happens, I'll update on my channel, or if need be and it's free, I'll do another stream. But I've been running for long enough today, guys. Thank you so much for popping in. If any of you are interested in the way I trade, I'm taking one-on-one students again, so just reach out if you're interested. Otherwise, just catch me on my YouTube videos, in my channel. I'll start posting more again. And I'll talk to you guys soon. Yeah, apart from that, if you need anything from me, just ping me in crypto chat. Yeah, love, bro. Thanks, Caleb, for being here, bro, every time. Yeah, but no problem, guys. Thank you for your time as usual, and I'll talk to you guys soon. Yeah, I'll put this on YouTube as well.